Hey everyone, welcome back to our series, The Complete Guide to Trading the Financial Market, where we are learning how to trade smartly and more confidently. If you haven't seen the first video in the series, make sure you click that little eye icon at the top so you don't miss out. And you can follow along with us step by step on this awesome journey. In this video, we are diving deep into one of the most important skills every traders need to know: price action trading and market structure. I'm going to break down price action trading and market structure in a simple and practical way. Whether you are a beginner or someone who's been trading for a while, trust me, this is going to give you more confidence. So, what is price action trading? In simple terms, it's about studying the price movement of an asset like a stock, currency, or crypto to figure out what's going on and what's likely to come next. If our analysis show that the price might go up, we go long or buy more. And if it's look like the price will drop, we go short or start selling. Hey, if you're new to this channel, welcome. I'm Omar, a part-time trader, and I spend most of my time creating content to help people like you to learn digital skills and start earning from home. I've been sharing the free tutorials on my website for over 5 years now, and yep, it's all completely free. So if that sounds like your vibe, go ahead and hit the subscribe button and be part of that community. Let's grow and learn together. In this guide, we are not messing around with the fancy indicators or complicated stuff. We are just going to focus on what the price is actually doing and what the candlesticks are telling us. We will look at a pattern, spur down resistance level, and how buyers and sellers are reacting in real time. Simple as that. Price action trading is all about trusting what you see on the chart, not what an algorithms tell you. Alright, now let's get into the market structure. Basically, it is the backbone of how the market moves. Before placing a trade, ask yourself a simple question. Is the market trending up, trending down, or just moving sideways? Let me walk you through how to figure that out. When the market's trending, it leaves clues in the form of highs and lows. And if you just pay close attention to those, you can figure out the trend and the key levels. If the price is making higher highs and higher lows, that's an uptrend. If it's making lower highs and lower lows, that's a downtrend. But sometimes the price not really moving at all, it just drifts sideways, and that's called consolidation. And honestly, during those times, the smartest things you can do is to wait. Don't force a trade, just be patient. Let me show you a real examples of these trends on an actual trading chart so you can clearly see where the highs and lows are and how they help us understand what the market is really doing. So here is a chart on a 1 hour time frame, and you can clearly see it's making higher highs and higher lows. That's the solid sign that the market is a strong uptrend. So that's the first step, figuring out the structure of the market. Once we got it down, the next thing is to watch how price behave at key levels. That's where we look things like the breakout, reversal, continuation patterns. All good. If any of those sounds a bit confusing right now, don't stress out. I will walk you through each one as we move forward in this series. Candlesticks are the favorite tool for the price action trader, and it is easy to see why. They give you a ton of information in one simple chart. With just a quick glance, you can get a feel of how price moved during the session. No matter what time frame you're looking at, each candlestick is a small piece of bigger story. It shows us the mood of the market, whether the buyers or the bulls are in control, or if the sellers, the bears, are taking over. And it also tells us how far they've managed to push the prices in either direction. Once you start really paying attention to those candles and how other traders and the big players are reacting, you are not just trading anymore, you are thinking like a strategist. That's the real power of candlestick pattern. They don't just show you the price movement, they reveal the psychology behind it, what the market is thinking, feeling, and doing. Alright, let's break down the candlestick and see what it's really telling us about the price action. A single candlestick gives you 4 bits of info for the time frame you're looking at: the open, the high, the low, and the close. Now let's check out the bullish candle, the green one, and break down the story it's telling us. This rectangular bar you see, that's called the body of the candle. The bottom of the body shows the opening prices. That's where the price started during that 1 hour time frame. The top of the body shows the closing price. That's where the price ended after that 1 hour time frame. Now see those thin lines stretching above and below the body? Those are called shadow or wicks. They show us how high and how low the price moved during the candle's time frame. Let's break down what these shadows are usually telling us. In this candle, price opened here and at some point it dropped all the way down to this level, likely due to a selling pressure. But then buyers stepped in, took control, pushing the prices up all the way to this point. However, sellers come back again and try to pull the prices down. But buyers held strong and the price didn't fall much further. Eventually, the 1 hour session ended and candle closed up here, showing us that the buyers was still in the control by the end. Now, on the flip side, let's look at the bearish candle, the red one. It's basically the same story, but in reverse. Here the price opened at top of the candle body, and because of the selling pressures, it dropped down and closed lower. Now let's talk about the interesting parts, the wicks. The candle opened here, and during the sessions, buyers stepped in and managed to push the prices up to this point. But the seller was strong in this moment, so the price dropped sharply all the way down to this low point. Towards the end, buyer gave it one last push to take control and managed to push the prices up slightly before the session ended. But overall, the seller stayed in control, which is why the candle closed lower than the open, and that's what actually make it red. Candlestick also come in different style, and once you understand them, they can really help you figure out when it might be a good time to enter a trade. By looking at how these candles behave, we can get a much clearer picture of what's actually going on in the market. So here is the basic idea. If the candle is green, that means the price is going up, buyers are in control. And if it's red, the price is dropping, we tell us the sellers are calling the shot at that point. Alright, so when it's come to making real trading decisions, there are 3 main types of candlestick patterns you need to know. And once you understand them, how they work, you will start seeing the market way more clearly. And spotting trade setups will feel a whole lot easier. So let's break them down one by one. Let's start with the first one, momentum candles. These are the ones with long body and really small and sometimes no shadows at all. And what they show is the pure strength in the market, either from the buyers or the sellers. If it's green candle, buyers are clearly in control, pushing the prices up with confidence. And if it's red, then selling pressure is strong and sellers are driving the price down hard. Momentum candles are often your green light to enter a trade, especially when they pop up around the key levels. And don't stress if you're not sure what a key level is yet. I will walk you through that in our next video. For now, just focus on reading the candlestick and understanding the story behind the bodies and the shadows. Some classic examples of momentum candles include the piercing pattern, dark cloud cover, engulfing pattern, and Marabuzu. I've added a link below to my website where I've explained each of these patterns in detail. So if you want to level up your trading skills, you need to check that out. Next, we have Indecision Candle. This candle have a small body and long shadows on both sides. And what they're really saying is this. There is a battle happening between buyers and sellers, and no one is winning. Here is what actually happens. Buyers try to push the prices up, but sellers push it back. Then sellers try to bring the prices down, but buyers jump back in. So the prices keep bouncing back and forth. And by the end of the session, it closed almost exactly where it started. That's a clear sign of uncertainty. The market hasn't made up its mind yet. So when you spot these candles, especially around the key levels, don't rush in. Just stay patient, stay calm, and wait for the strongest signal before making a move. Some common examples of indecision candles are the doji and the spinning top. Now let's talk about Wick rejection candles. These are some of the most powerful signals in price action trading. These can show a strong push in one direction, but then a clear rejection. Let's start with a green candle as an example. It open here, try to push higher, but doesn't go very far. Then suddenly sellers jump back in and drag the prices all the way down to this level. But the buyers aren't done yet. They fight back, reject those lower prices, and push the price back above the opening level. Sellers try one last time to take it lower, but time's up, and the candle closed somewhere close to the opening price. Now, on the other hand, with a red or bearish candle, the same story, but in reverse. It opened here, and buyers step in confidently with a cup of coffee and push the prices way up. Then out of nowhere, sellers show up and hit back hard, dropping the prices below the opening prices. Buyers try to recover but can't. Time's up, and the candle closed somewhere near to the opening prices with a long upper wick. So, what does this mean? A green candle with a long low shadow means buyer was strong enough to reject the lower prices. And a red candle with a long upper shadow shows that the sellers took the control and reject the higher prices. Some classic examples of wick rejection candles include the hammer, gravestone doji, dragonfly doji, and the hanging man. And by the way, the hanging man is one of the strongest signal in trading. If you want to learn more, I've dropped a link below in my description. Go check it out and give it a read. It will surely help you in your trading someday. Let's consider a real example from the chart to understand how these candles actually behave and how different candle type can help us make smart trading decisions. So here on a 1 hour time frame, the market has been on upswing for a few hours. Then suddenly an Indecision Candles appear right at the top. That's our first clue. You will notice it has a long shadow and a small body, which tells us that there is a battle going on between the buyers and the sellers. Buyers try to push the prices higher, but strong selling pressure pull it right back down to where it started. That's the classic sign of hesitations or what we call market indecisions. Now, here is the interesting thing. The very first candles give us the clear signal. In this case, it's a bearish momentum candle. Strong red and full body pointing to a possible reversal and a big move down. This is how combined candles type give us a full story and a smarter way to enter or exit a trade. Alright, now let's talk about something really powerful, your trading edge. This is your advantage, your unique insight into the market. It could be a specific pattern you have mastered, a setup that worked for you, or a way you read those little imbalances between buyers and sellers. Developing a trading edge is how you figure out whether a trade is actually worth taking. Is it practical? Is it repeatable? Can it give you a consistent results over time? And here is the truth. You don't just stumble on your edge overnight. It takes time. You have got to test ideas, try things, make mistakes, and figure out what actually works for you. Once you have found your edge, the world doesn't stop there. Markets change, setup evolves. So your strategy has to grow with it. That's why tracking your performance is so important. Your growth as a trader comes from learning, adopting, and constantly refining your approach. Now let's talk about a simple approach to spotting a trading edge on our 1 hour time frame chart. And you can use this exact same method across all time frames. Here is how you can apply it step by step. Step 1. Identify market structure. First, figure out the direction of the trend. If you see a series of low lows or lower highs, you are in a bearish trend. If you see higher highs and higher lows, you are in a bullish trend. Step number 2. Mark your key levels. Next, draw your support and resistance zones. These zones are super important in trading. Understanding them properly can make a big difference in how successful your trades are. No worries if that sounds tricky. In the next video, I will deep dive into support and resistance levels and show you exactly how to find them and why they matter so much. But for now, just keep this in mind. In a downtrend, old support often becomes new resistance, and that's usually where sellers jump back in. Step number 3, look for the candlestick signal at these levels. Now this is where it gets interesting. Watch how price behave when it comes back to these key zones. If it's spotting a strong momentum candle, clean, clear, and moving in the direction of the trend, that's your signal to enter a trade. The key here is confirmation. Don't rush, let the candles tell a story, and then act with confidence. Price action is raw. It is the purest form of the market data. No delays, no filter, no fluff, just the truth of what's happening right now. But here is the thing. Two traders can look at the exact same chart and see completely different things. And that's exactly where experience comes in. The more time you spend watching chart, practicing, and learning from what you see, the better you get at spotting the little signal that most people overlook. And just one last tip, never make a decision based on your single candle or one pattern. Zoom out, look at the bigger picture, combine it with the market structure, price behavior, and overall context before jumping in. Alright, I hope you enjoyed this video and that it helped make price action trading, candlestick behavior a bit easier to understand. And if there is anything I missed or if something wasn't clear, Just drop a comment below and I will cover it in my next videos. In the next video, we are diving into something super important, support and resistance level. It is the second part of the chapter and we will break down exactly what these levels are and how they work, and most importantly, how to use them in your trading to make your entries and exit way more accurate and effective. Thanks for watching. I will see you in the next one, and until then, happy trading.